All right. This video, we're just going to be talking about support and resistance, how to identify them, um, how to know when they're established, when they're broken, how to use them, so how you can use them to frame the market for you. So usually, say for example, you see the market run up, run down, run up, run down, run up, run down, and you get a strong reaction off of a particular price. So in this case, it's 40, 80, 70. So now you have kind of a high or a point in the market, a price in the market where you had this strong reaction off that price. So the market might, after that, come back to retest it, as the market always does. It might retest it and fail. So that's how you know there's an area here established. So at this point here, there's a point of interest almost where you want to know what the market might do at that price where it gave a strong reaction. So usually it'll come back to retest if there's momentum up. So a retest and failed gave us another strong reaction. So at this point, you know there's an area here. Okay. So now the price might want to break structure or whatever it might want to do and maybe find some place of support. Say it finds it right about here. So the market might want to either try to break this area one more time or continue down. So say we found an area of support, it's gonna have to be significant. Sometimes the market just might want to take a breather and find more buyers at a better price. So if there is support here, you would want to see some significant momentum up or a significant run up off this price. So say we do, say this is our significant run up. Okay. So now that you established, hey, we're having movement back to the upside now. Say the market wants to retest this price one more time. And we want to figure out when this area is broken, or how does that look like. Okay, so the market might run strong at it, maybe stall a little bit, and then try to break through. Well, at this point here, is this enough separation from this area to consider this area broken? Because this could easily just come right back and give us a FOBO, and the market was just testing this price level one more time. So what you want to see to consider an area broken is separation with some good strength. Okay, so maybe about a few points of separation. Every area broken is gonna look different, so they might not always look the same. Sometimes it might just continue further higher, and obviously it's broken, right? But there's times, most of the times, this is a repeatable pattern that the market does, is it will back test areas. The market loves to test, retest areas, and if the area is broken, then it will love to retest. And then usually what will happen is, on any area that you might find, once they're broken, they're flipped. So if you had a resistance area here and it breaks it here, the market will always try to flip that as support. So your job is to figure out how these look and how they should look, because sometimes you get no separation and it just pokes the area. The market likes to poke things. Nothing is drawn picture perfect. They're always a little blurry, a little messy. The market is like a natural thing. You're dealing with nature, and nature is never really the same. It always has this variation. So you might see a poke, which we don't consider this broken. And the reason why you want to figure these out is because you can trade around these areas. So there's potential trades in these areas. If you know the market loves to retest, or not loves, but will retest an area to confirm it, and you know the market will backtest things to flip them, which area, rather support into resistance or resistance to support. If you know these market behaviors, then you can form setups around these behaviors. So if I know the market loves to retest, then I'm going to be looking for a trade once we get a deeper pullback or momentum off that price, a trade to give the market a chance to retest, because I know the market behavior retests things. So there's a trade setup here. If you know when an area is broken and the market behavior is to always retest it, then you can form a setup around that behavior. They call this a breakout trade. Sure, it's a breakout trade, but it's a behavior that they're trading rather than a pattern. People, I think, rather mistake these as patterns rather than a behavior. They almost kind of go hand in hand. But rather, this is a behavior that the market does, a human behavior, because this is all based on humans and the way we interact with the market. So it's a behavior, right? So you have a behavior that backtests and then it breaks out. But you want to know when you have enough separation, okay? So if it just pokes, is that really enough separation? Because another behavior that the market likes to do around these areas is give phobos, fake out breakout. And those look like us once they do happen. So say this. So if you get this, a breakout, but it fails, then another behavior is the market will love to break back inside the area and reestablish this, once broken, back into resistance. So there's another trade off another behavior, off of it didn't work out, so everybody knows, hey, it couldn't go, it failed, so let's trade back to the downside and maybe retest this rather launching pad, kind of established as support, but rather just a launching pad or a place where people decided to, hey, this is a good price enough for us to start buying again. If you have the market was trending up, obviously, okay? So there's another behavior there. So this is why knowing areas are very important, and like how to use them, because they're usually points of transfer points, mostly like it's transfer place, but you can use them as targets, entries, pretty much. So